Mhm. Hi there. I'm gonna go over the trade that I just backtested in today's session. I'm not executed any positions today. I was not available for the whole day. I was outside. I'm doing some other job. So actually today was a really solid day. A lot of opportunities for me to go for an entry. When I was backtesting the market, it was really great. So all I need to do is just go back to the 1 hour time frame. I'm not go so just go to daily time frame. This is a daily time frame. As you can clearly see, this is the Friday candle, the today's candle, and what's going on here? Yeah, today's candle, and market is the order flow is bullish. Nice pullback to the downside. Structure shift. Like, like this continue up to the upside, break above to come all the way down. You can clearly see yes, there was a tiny sweep and it's leaves a big imbalance like the bearish fair value gap in daily time frame. So we can expect the price to reach this level. That was my plan in the morning. As soon as it sweep the previous day low, I expected the price to reach that today's high, previous day high, and at least to the bearish fair value gap. That was my game plan in the morning. 4 hours. You can clearly see the last down close candle, this big displacement candle, tiny fair of holding the price, failed to clear up this low. Instead, it swept the internal, which means the previous day low, swept the low, big displacement to the upside, cleared up this liquidity, and entering this big bearish fair value gap, which is just obvious for our daily 4 hour and 1 hour fair value gap. In 1 hour, it's gonna be obvious. As you can clearly see, the previous day, the whole market traded inside this range, inside this fair value gap from this was our more last day. This was the Wednesday. Wednesday move, big down, big displacement towards downside, which leave this bearish fair value gap open. And the following day, the Thursday, it was traded inside this whole range. This was the previous day low, Thursday low. It's traded inside this range. There is no good price action in Thursday. Um, as soon as it sweep the previous day low, which is 15 minutes fair value gap here, I will show it very quick. Previous day low swept, and you can clearly see 1 hour change in the state, which is also leave this big fair value gap, which open this big fair value gap, so we can anticipate the higher prices and expecting this is our draw on liquidity for today. That's what exactly happened. The news candle helped us to cut the move, not to cut the move, it's hit the target. Previous sweep, changing the state, fair value gap, getting tapped. Nice reaction, nice sweep. Go all the way up towards our anticipated projected target in 15 minutes. Mm, yeah, this is the previous day, the Wednesday move. The loss formed a fair value holding the price. You can clearly see that loss formed fair value holding the price. Previous day low sweep. And you can clearly see the last fair value gap that holding the price now got ran through, which leave this fair value gap open. So we can expect this level holding the price and pushing higher. And obviously this is going to be the triple top. So obvious liquidity pools, buy side liquidity. So we can target this, which is also a previous day session highs, which I targeted last day, which didn't got approached just because for this moment to come, liquidity pool. The next, this is the you can clearly see that engineered liquidity. So this is going to be the next target. That's what exactly hit because this is our important level in 4 hours. Sorry, in 15 minutes, 5 minutes. This is a market open candle from all the way down, manipulating to the down. You can clearly see that big displacement to the upside, accumulation after that. big displacement, flip, changing the state. After that, what happened? Accumulation, manipulation, distribution. That what happened here. It's accumulated from around 4 o'clock to almost 9:25. Accumulated here. Then after the market open, it's manipulated to the downside, sweep all the liquidity and tap this fair value gap. Then what? Changing the state to the upside. Nice pullback towards the breaker. So changing the state to the upside. Nice pullback towards the breaker. As soon as the 10 o'clock bubble start to speak, it's start to skyrocket towards the anticipated drawn liquidity. So yeah, in 1 minute I'll explain it in very clear. You can clearly see that. So this is our sell side liquidity which is marked in the morning, which align with the M5, M15, H1 bullish fair value gap. As you can clearly see, this is a market opening candle come all the way manipulating to the downside. After this big accumulation, nice manipulation to the downside, sweep all the liquidity. Then what? Nice inversion. So this is our entry model. Market open, liquidity sweep, inversion. We can enter the position, put the stop, but where put the stop, but not here. We should put the stop, but this at least to this candle low. Start of this thing, which give at least 1:1 for us. Which give at least 1:1 for us. Got it? Yeah. Market open, liquidity sweep, inversion. Where? Yeah, inversion entered, put the stop at this low. Exactly at one candle below, not here, like here. Give me 1:1. That's our entry model, initial entry model. Then what happened next? After that, it's kind of come down, tap this fair value gap, sweep, come all the way down. This flipped up the initial fair value gap, the first print of fair value gap that got inversed, holding the price, pushing higher. After 10 o'clock, it was a very big move. Clear out the previous day session highs. Previous day session highs, big displacement towards upside. Go all the way up. Tap. Also entering the daily fair value gap. Daily bearish fair value go all the way up. So this is where we got one more entry. I marked out the 50% for daily fair value gap, also the 50% of the daily fair value gap. We got the really nice move. So after this big expansion, like my 10 accumulation, again expansion, fair value getting tapped, pushing higher. This we where we got the initial flip. This is where we got the initial flip. So this is just a back test. So I didn't execute any position to be honest. And this is just a pure back test. Back test. This is what I saw in the morning. I knew this move, but I didn't knew these moves. This is purely just because of back test. Inversion entered 50. The reason behind that is face big displacement to the upside, so we can expect some rebalance to this level, at least to the 50% level. And price entering the daily fair value gap, 50 and tap the 50% level. After it get into the 50% level of the daily fair value gap, it gives the nice flip. So I expected this move towards downside at least to this low. So if I expecting because the reason why it's failed because this is just a 1 minute model. So the last one that holding the base line through changing the state, everything has been aligned, flipped, everything has been aligned. But the problem why it's not working is this is just a 1 minute price action. If you see this thing in 5 minutes or 3 minutes in high time frame, it's literally nothing. It's just a single candle. It's literally nothing. There is no significant swing, no swing high formed. That's the reason why it's not worked. But we can anticipate this kind of price action if we get this kind of big impulsive move to the upside when we have the news or something like that. We can expect the quick dump. That's from that perspective, it's a good model. So as soon as we get the flip, we entered, put the stop at this high. It gave 1:1, at least 1:1. So after 1:1, we probably do what we can do. Partials entry to break even or partials. So keep the entry at the same point, which obviously going to the break even trade. Yes, our plan is going to take do some action after we got the 1:1. So then what happened? We go all the way up. clear out the first leg, we kind of accumulated here. Then what? After clear out the first leg, it's kind of accumulated here. Print some SMT, clean changing the state. This is okay. Print SMT, clean changing the state with big displacement aligned with this fair value gap. So the fair value getting tapped, try to sell off all the way down towards this level, towards this liquidity, towards this fair value gap. Nice play, right? It solely gives sorry, 2.6, 2.5, which is great risk reward ratio. If you project the loss manipulation right here before the change in the state, it cleanly projected this target 2 to 2.5. It is not only 2 to 2.5. If I go to 5 minutes, I can clearly show you one more thing, which is very obvious. Um, yeah, if we go to 5 minutes, this is the candle which has a big wick. If I mark the consequent encroachment, the 50% of the wick cleanly get respected. As soon as it gets swept, get respected. Instant reaction. What's the instant reaction? Inversion of the recently formed bullish fair value gap. Go back. Sorry, and it's went all the way back up to my entry point, and it's almost not almost. It also flipped the fair value gap, so it's most probably going to go higher, or it might come lower. I don't know, but the thing is, it got reversed. The reason behind that is consequent encroachment get respected, and it's also a if I projected this is a 2 to 2.5. This is where we should close our position. This is where I should close my position. So yeah, man. So the reason why it's not worked, why it's worked, because it has a lot of things. High time frame wise, it's a clean state change the state. 3 minutes, 5 minutes, it's clean change the state with big displacement. We have the SMT, and also it sweep the initial and we also did the initial manipulation and also sweep the first leg. That's the reason why this entry worked. That's the reason why this entry worked. This entry didn't. This is just a very early move in 1 minute. And we don't get much information, much structure here. It's just a flip. As soon as it reaches the 50% of the daily fair value gap, it gives some reaction. So I entered with the stop at this high. So the optimal stop loss should be after we get the flip. The optimal stop loss should be this candle, the fair value which flipped, right. This candle high. This could be the optimal stop loss. So it's almost give 1 is to 1. Almost 1.2, close to 1.2, but we have to close it 1 is to 1 because it's a low probability model. It's not a high probability model, so we have to close 1 is to 1 partials, tend to break even, get stopped out. That's going to be the optimal play here. Here we have a lot of information. It is a plus 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 setup, so we can anticipate the price towards the willing price to the willing location. And it's clearly after sweep this internal, it's kind of what? It's kind of engineering the liquidity here. Yeah? It's engineering the liquidity here, swept inversion, go all the way up back towards this level. Nice reaction, right? It's no, it's almost flipped the level, flipped the family. Not almost, it's literally flipped the family above. It's clearly closed above. So most probably it's going to act as inverse and pushing the price higher. Yeah, that's a nice trade. So for today, the Friday, this is going to the first entry, gave 1 is to 1. Second entry gave 1 is to 1. The third entry gave 1 is to 2 to 2.5. But for me, this is my model, and this is not A plus plus model. This is my model. This is also my model, but not A plus plus. But this is the one A plus plus because it aligned with a lot of things. Lot of things. That's the reason why I gave it A plus plus model. That's it. That's it, man. I can target this, but the thing is, it has a big wick in 5 minutes, and that wick, if I mark the 50% level, that 50% level give really nice reversal. Really nice reversal here. It's 5 minutes. In 5 minutes, it's a clean sweep plus inversion. And it's also engineering the liquidity here. Swept on last time. Inversion go all the way up back towards at least this high. We can expect at least this high. That's it. It might sweep the high. It might. So if the market is really bearish, it might sweep the high and come lower. It might be this whole move is just to sweep the internal. I don't know. Let's see what's going to happen. So that's it, man. Have fun. Reach in. See you on Monday.